All right. So technically we are live, which my joke every time I go live is if a tree falls in the woods, nobody's here to, nobody's there to hear it. Did it happen? So until we see one person show up, but listen, it's being recorded. It's going to be on social. So we might as well, you and I just get started and folks will come as they do. Quick intro for you. So everybody, hi, I'm Claire Wasserman, founder and author of Ladies Get Paid, an educational platform that helps women earn more and live better. And I am so excited to bring on to my live today, Tess Waresmith, who has a really great company name, which is Wealth with Tess. And it is a financial education business that helps professional women and entrepreneurs build their wealth and confidence using simple investing strategies that anyone can do, even if they are short on time or total beginner. We love the word simple. We love that. I also love the word strategies. I just feel like there's being strategic, that kind of way of approaching your career and money is not something as women, or at least I'll speak for myself, that I was taught because it feels maybe a little sneaky, but I think it just is about long-term vision. And those short-term next steps to getting to that long-term vision. And that's going to be a big theme of the conversation that I have here today with Tess is, yes, these big daunting things like investing can sound so scary, but how do we take the first steps and also in tandem mindsets that need to be shifted? And just so everybody knows, these lives, I've been doing them now for about 3 weeks, but it was just me and I got lonely. And I also felt like, if my mission is to help women earn more and live better, why would I not do that by inviting other women on who also share that mission and are approaching it in various ways? So Tess is the first in the line of at least another 3 weeks of really fabulous coaches. And Tess, I'm going to have you kind of take it from here. I mean, I know that something that you're excited to talk about today is just common myths, busting common myths about investing, to show folks that it really is not as complicated as you may have been led to believe. Starting with you, though, with your story, were you brought up learning about money, or what was kind of your confidence level around money and investing? And what was the decision behind wanting to actually make this a focus in your career?
Absolutely. So first of all, thank you for having me. I love what you do, and I'm so excited to be here. I am a Ladies Get Paid super fan, for those of you that don't know. But I started being aware of money very early on, but I came from a place of fear. So I grew up very, very afraid of money. I always felt like we weren't going to have enough. My mother would regularly say, like, I don't know if we can afford that. And in hindsight, I grew up firmly middle class. We were okay, but regardless, everything that she said to me about money created a lot of fear. So very early on, I was aware that money was something that you needed to get, and then you needed to hold on to it for dear life. And I felt like it was just going to like fly out of my bank account whenever I did get it. And so I was always very frugal with money. I didn't really know anything about investing. Graduated in 2009 into a recession and got rejected from every single job. And that was very scary because I was worried that I'd never find a job, never make money. And I ended up working on cruise ships of all things as an aerial acrobat. That was my first job. And this is relevant to my money story because it allowed me to save a lot of money. And that was cool. The crew bar was super cheap. Beers were cheap. I had free living, which was amazing. And it gave me this opportunity to save a lot of money. And I knew enough to know that I needed to invest it, but I didn't know how. I didn't think I was good with money. I thought I was probably not smart enough to learn how to do it on my own. And then I needed somebody to do it for me. So I hired a financial advisor. And while now I look back, I think that person probably had good intentions. They weren't necessarily educated in a way that actually worked in my best interest. And so that relationship caused me to lose a lot of money. This person sold me a financial product for $20,000 that was better suited for somebody in their 50s. I eventually learned enough about investing to go through my investments, and I found that there were duplicate investments. The financial advisor was getting commission on investments that were almost exactly the same as other funds. And the last piece of this was, at the same time, I also made a real estate investment without doing my proper due diligence and lost a lot of money on that. So this was all in my mid to late 20s. And I had so much shame, Claire. Like, I felt so stupid. And I was so upset because I had, saved money and I was so excited for it to finally grow. And then I made some of these mistakes. I found the wrong person. And for a while, I was just like super frustrated and defeated. And then at some point, I picked up a book. It was actually a Tony Robbins book, which weird for me. I don't necessarily like love Tony Robbins. I can't even tell you like how this book ended up in front of me, but I started reading this book, Money Master the Game. I can't remember what it's called. But what it did for me was laid out some ways that you can invest in really simple ways that aren't complicated. And then I did a ton of research and I started talking to millionaire investors I knew, and I started reading every single book I could get my hands on. And I talked to a lot of successful people that were investing. And what I figured out was the best strategies are actually really, really simple. It feels very complicated because there's so much financial jargon, and a lot of the messaging towards women is a little bit gaslighty, right? It's like you are an excessive spender, like you need to budget, like investing's not for you. That's like a guy thing. And after digging into it, I realized it's really not that hard. And so now the reason I started my business was, one, I don't want anyone to go through what I went through and to lose money and just feel like so much shame. But I also want everyone to know that it is actually much more simple than you think. And even if you're somebody that's bad at money or you think you're bad at money, you can learn this. And I think most people think that it's going to be really complicated, and they're probably doing way more complicated things in their life right now than learning how to invest. It just feels very, very complex because the language is unfamiliar. So what I try to do in my content, in my online beginner investing programs, is to make it as digestible and simple as possible. And the great news is that the more simple you keep your investing strategy, the likely you are to get better returns, which is great for the average investor. So that's what I teach, and that's how I got here. And it's been quite a journey, but I find that a lot of people feel like they're not smart with money, or they don't know enough, or they're not good at money. And it's a skill, just like anything else. It takes a little bit of intentional effort to learn, and you can get started pretty quickly.
Yeah, it's so wild how I love that you said it's a skill like any else that you can learn. It's like we think that you have to be born with this. You're either good or bad at money. It's a talent that cannot be fostered or created. It just is. For those who are considering financial advisors, what were some things that you would caution, what are red flags to look for or questions to ask so that folks who don't want to end up in that situation like you were in, what can we tell them?
Absolutely. So the first thing I would say before I get into the specific questions is to get a basic financial education. There are so many ways to learn the basics of investing, whether it's through books or online courses like mine. You can start to learn some very simple things about investing that can help you have more intelligent conversations with a financial advisor. So I actually have people that go through my online beginner investing program, and then they decide, actually, I do want to work with an advisor, but now I just know how to talk to them and I feel much more confident in what they're doing. So I would say, blanket statement, starting with a financial education is really, really important. And there's endless ways to do that: podcasts, books, online courses, you name it. And then what I would say as far as specific questions, one thing I would ask them is how they are compensated. So financial advisors are compensated in a variety of different ways. The vast majority of them get compensated with what's called AUM, assets under management. And what that means is whatever money you give them to manage that's invested, they get a portion of that money. They get a portion regardless of whether your investments do well or poorly. Whatever it is, they get a percentage of your money. And understanding also what types of things they get commission on. Do they get commission for certain investments in your portfolio? Do they get commission on products they're selling you, whether it's annuities, insurance, et cetera? How they're compensated is the most important question. And I'll offer this. What's great about where the financial industry is headed, and some amazing strides as far as transparency that are happening, is a lot of financial advisors now are offering what's called a fee-only structure. And instead of charging you a percentage of all the money that you have invested, they are charging you an hourly fee to set up your investments, to give you specific financial advice. And I personally love that model because it's very transparent. You know exactly what you're getting. And they're motivated to educate you and make sure you're set up for success. Whereas somebody that gets a percentage of your assets, it's a little bit of a conflict of interest because they just want you to invest as much as possible. So I'm not saying that all financial advisors are bad. There are some great ones. I have like a few amazing fee-only planners that I recommend people go to all the time after. Some people end up taking my online programs and they're like, I want to invest on my own, I'm good. And other people don't want to do that. As long as you do it, I'm happy. As long as you're investing and you are making your hard-earned money grow for you, I don't care how you do it, but if you do it with a financial advisor, getting a basic education and then understanding how they're compensated is really important. And I would highly suggest looking into a fee-only planner.
Okay. Okay, great. Do you remember back when you were reading that Tony Robbins book or I guess the sort of early days of doing research, were there certain aha moments that you had where you were like, oh, okay, I feel like there's like a something that got unlocked here for me. Because it's also one thing to realize, oh, okay, I can do this. And another thing to get really passionate about it and wanting to make it a focus of yours. Or were you already kind of in the financial industry before?
I wasn't in the financial industry at all. I
Okay.
actually worked for a marketing agency for a long time. I still do. And I had been interested in investing. And I'd actually at this point started to invest in real estate. And I corrected my big mistake that cost me a lot of money. So mistakes can be lessons learned. And I am in a better place because of that mistake now. But no, I didn't have any financial experience specifically in my professional career. But my aha moment in terms of realizing how valuable this information is and how it is so much more accessible than people think is when I started to learn about index funds. And if we go back to the beginning of our conversation here, I shared that the financial advisor I was working with had all these investments. Like in my portfolio, I had 30 different funds and I didn't know what any of them meant. And it looked super complex and super confusing. And so I spent like a few nerdy weekends going through every single investment and trying to understand what they were. And that's how I figured out that some of them were duplicates. And then after I started to educate myself more, I realized there were investments called index funds that, first of all, index just means list. So if you think of like the S&P 500, the S&P 500, if you ever hear that term in the news and they say it's going up or it's going down, all that is a list of the top 500 US companies. And that list is used to measure the performance of the stock market. So what I learned was that you can invest in funds that hold all these different stocks, sometimes a specific list of stocks like the S&P 500, or there's even index funds that hold every single stock in the world or almost every single stock. So you don't have to learn how to pick stocks to create a simple portfolio that is diversified and reduces risk. You can do this with a couple really simple investments. And that unlocked it for me because when I was working with a financial advisor, I would see in my account like all these letters and numbers and crazy graphs. And I was like, there's no way I'm going to have time to figure out how to do 30 funds myself. Like that is like wholly unreasonable. But what I realized is that you can do that in a very simple way with a couple investments. Sometimes even just one fund can have everything you need. And you really shouldn't have that many. In fact, my returns were actually lower than if you had just picked like one average fund that held every single stock market and just got the average return in the stock market. My return would have been higher than that crazy 30 fund portfolio that my financial advisor had created for me. So again, not every financial advisor is going to do that, but that's why it's great to have an education so you can understand what you're invested in and know how your money is growing. So that learning about index funds and that concept of, oh, you can invest in something that holds a bunch of different companies and I don't have to worry about reading company financials or statements or keeping up to date with all this stuff. I can just buy a few funds and contribute to them over time. That was like a huge aha moment for me.
And why focus on investing? You know, there's so many different aspects of personal finance. Why did that for you be the driver to wanting to create a whole program around it?
I read a lot about the gender wealth gap at some point during this journey. And I had been very passionate about, helping colleagues and friends make more money at work, which is why I love your work and what you do. The reason I focused on investing is because the more I read about the gender wealth gap, it gets compounded in stages. So you make less money at work and then you're not able to invest more money. And then women just have less money in general. And the reason I'm excited about investing is because I think it's a super powerful tool, not just to make money, but to help create a life you want to live by creating another stream of income for yourself. And having creating enough money and enough wealth through investing and using investing to build that wealth much faster can help you get to a place where you have more optionality to leave a toxic job or a shitty relationship or whatever is going on in your life. So investing for me isn't a tool to get rich so you can like buy Ferraris and like mansions. Like that's cool. But like, that's not why I love helping women do this. Like when I work with somebody and they are like, I am confident now that I have a plan and I know that in X amount of months, I'm going to be able to leave my job, or post divorce, I understand my finances and I don't need to rely on anyone else to help me move forward and to help me build wealth. Like that's the power of understanding investing and investing your own money and growing wealth. It's not to be rich. It's to have time, independence, freedom, impact, especially for women with everything that's going on right now. Like how can we impact the issues we care most about? That's the rad stuff that I love that comes after you start investing and your money starts compounding and you're using the money that you're already working so damn hard for every week and making the most of it. So right. That's what gets me excited about investing.
Love it. I know it's like, we teach women how to, you work hard for your money, but now it's your turn is how do you make your money work hard for you? And that's what investing is. Let's talk about mindsets though first. So even just bringing myself as an example, for a very, very long time, what I felt about my bank account was not aligned with what actually was in my bank account. I was many years still stuck in a scarcity mindset of I only have, I remember when I moved to New York with like $300 in my bank account. Obviously I have more than that now, but for so long it was, I can't invest because I don't have enough money. So what, both mindset, but also brass tacks here, like what is there a certain kind of person who maybe you say, actually, you're right, you don't have enough money. Like what is enough money to invest actually look and feel like, and how do we get those things aligned? And then we can talk about those first steps towards where do we want to be putting our money if we don't have much of it.
That's a great question. So the first thing I'll address when it comes to money mindset is if you feel like you have a complicated relationship with money, that's completely reasonable, just given the amount of factors that impact how you look at money. So like how you grew up, what your parents taught you about money, what they didn't teach you about money, socioeconomic background, where you went to school, if you didn't go to school, what kind of jobs you had, people around you. Like there's like endless reasons why your relationship with money might be toxic or complicated and whatever it is. And so to address your mindset around money, I kind of believe that you need to parallel process two things. One is start to bring awareness to how you feel when you transact. So if you buy something, like how does that make you feel? Did you feel like guilty for buying that? Do you feel excited about that? Are you spending money because you're, having like a moment, whatever it is, like, and no shame for however you're spending your money, but starting to bring awareness. You can do this with a money diary. It's kind of a pain in the ass, but it's a good exercise, is to like write down what you're spending money on and just like, how did that make you feel? And like very quickly, you'll start to unlock what your relationship with money looks like. And that will help you figure out the next steps to change it, which is another conversation. But that I think is a really important first step. And then as far as it goes to, once you've figured out your money mindset, where you need to take it from there and what's important to make sure as far as like how much money you have. The question isn't really how much money you have. It's what do you have done? Have you checked off, I would say, non-negotiable boxes? So most financial coaches that I'm aligned with have a similar perspective on this. And so there's a couple things that you'd want to do before you start investing. The first thing is to create an emergency fund of 3 to 6 months of expenses. If shit hits the fan, you have money that you can access really quickly. And by the way, right now, high yield savings accounts are an amazing place for that because the rates are incredibly high because the Fed has increased interest rates over the last few months. So things that are good about what the Fed is doing is actually that you can put your money in a high yield savings account and get a 4% return with a lot of banks right now. So,
and there's no penalty to take out if you need it.
No, it's just an online savings account. There should be plenty of options that are no fee, no penalty, and have a pretty high rate of interest compared to your normal big bank, which could be like 0.04%. So 4% versus 0.04 is a huge, huge difference. So if you don't have a high yield savings account, that is your takeaway from today. But so the emergency fund is the first thing. The second thing would be to pay off high interest debt. So most folks, that looks like anything that's 7% or above. And the reason why you should do that before you start investing is because the average return of the stock market is roughly 10% minus inflation, around 8%. So if you start investing before you've paid off that high interest debt, you're actually going to be kind of a little bit in a hamster wheel because you'll continue to accrue more debt and your investments might not be growing at the same pace. So the best thing to do is to pay off any high interest debt over 7% and to have that emergency fund. Once you've done those two things, even if you only have $50 a month to invest, you can start investing with a very small amount of money. And the reason for that is because there are things called fractional shares, which means that you can buy a portion of an index fund or a portion of a stock. You don't have to buy a whole piece, a whole unit. You can buy like a portion or a fraction. So a lot of people think that you need a lot of money to start investing when actually the most important thing is to figure out an amount that you can invest monthly and then do it consistently and build that habit. And then over time, you can always increase it. And what happens is a lot of people feel like they don't have enough money or investing is only for wealthy people, and then they wait to get started. And the problem with that is the most valuable thing you have in your court when you start investing is time. Right. So even if you start investing with only 50 or $100 a month, that's going to compound over time. Compound interest, in my opinion, is the most beautiful mathematical equation that exists. So it's better to get started now than not at all, and learn it now. And then as your money grows and as you read Ladies Get Paid and you learn how to increase your salary, then you can increase that amount over time. So there's no shame in starting investing with like $50 a month if that's all you have. Get started, learn a little bit, and then you can increase that amount over time.
I love it. I love it. And just to confirm on the debt, and I want to be clear to everybody, this is not, fine print here with the lawyer would be like, this is not financial advice, but of course it is financial advice, but you're smart. You should take it and filter it through your own situation and get outside counsel. But so, barring that, are you saying people who maybe have student loans and credit card debt should not invest at all? Or should they be paying off the majority of it, like stagger it, because there's some people who, especially if you've got like law school debt, I mean, you're paying that off for many, many, many years, and knowing that, compound interest is a beautiful thing, but requires time. I'd be hesitant to say hold off completely on investing until you're done with paying off things like student loans. But yeah, what's your thought about staggering that?
Yeah, it depends. It really just comes down to the interest rate. So if you have your student loans might be lower than 7%, especially if they're federal. So you could have a mortgage, you could have student loans, you could have car payments. If all of those things are under 7%, even like 8%, you can start investing. 7% is a better rule of thumb because we just don't know what the stock market is going to do in the future. So that said, if you're excited to get started and you want to start building it, like psychologically, it might be really healthy for you to start investing a little bit even sooner. Just know that like your number one mission critical is to get rid of high interest debt, which is anything over 7%. But as soon as you do that, even if you have $200,000 in student loans, if your interest is 5%, in my personal opinion, education, not advice, you should be investing and paying the minimums on those versus trying to pay those off quicker, because what you have is a low interest loan, basically. Same with your mortgages. Like a lot of people will try to pay off their house fast because they want to be debt free. And while that can feel great, usually if you do the math, especially because a lot of people, especially millennials that own property, they have mortgage rates that are super low, like under 5%. So it financially, mathematically, doesn't make sense for you to try to pay that off faster when you could take that same money and put it in the stock market, which we know historically gets an 8% return minus inflation.
I love this. Really helpful. And also education, not advice. Great. That's a good one-liner. I'll use that now. Any favorite stories, whether it's from your own life or from, clients, people you've worked with before, where you've really seen them grow and blossom, or change their situation or change their mindsets through what you teach? I would love to, and let's close out with inspiring some folks.
Yes. So my favorite, I know this woman who is a superhero, single mom of two, entrepreneur. She runs a personal training business, and She knew nothing about finances. She had gotten through a divorce a few years ago, and she mentally was in a pretty frustrated place with finance. And I share this story with permission, when we started going through her finances, she said, "Oh, I think I have a 401k, but like I don't know how much is in it. I haven't looked at it in like 8 years. It might have like $10,000 in it." So we were like, "All right, we'll go back and we'll let's find that. Let's find all your stuff." And so she thought she was like net worth negative by like a lot. We found this 401k. It was worth $80,000. And like overnight, her whole life changed because mentally she realized she was actually net worth positive, which is like an insane moment. And the lesson here is one, like if you have old 401ks, go find them because you probably have money that you earned and worked really hard for, but how valuable it is to understand where you are today and to figure out what your net worth is by understanding what do you have for debt, what do you have for 401ks or assets or whatever it is. What's the equity in your house? I had another student that felt like they were doing really poorly. And then when we did all the math in her net worth, her property that she had bought has gone up significantly. I wouldn't necessarily call your primary residence a home, but it is psychologically like what a great moment to understand like, oh, actually, I have a little bit more flexibility than I thought. So it's very scary for people to look at their finances and you're like afraid of what you're going to find, but you can't fix what you don't know. And a lot of times when people start to understand what their current situation is and figure out how much they can invest moving forward, they realize with compound interest, oh, actually, I can retire someday. That is in my future. And that feeling is so powerful. So that story is my favorite just because like overnight. And now, of course, she's like in the Fidelity app all the time. Like she'll send me messages and she'll be like, I'm thinking about this or I'm thinking about that. By the way, you do not have to do that. She looks at her investments more than I do now. She's like super into it, but it makes me very excited that she opened her own Roth IRA. She picked her own investments and she just has a plan moving forward. She's investing for her daughters. It's super cool stuff. So it's not an overnight success, right? She has a long way to go, but she knows where she's going and it makes her whole life feel better and her just feel more confident in every area.
I love that. Next steps. So for folks who are listening, who are in a position of whether they're beginner, or maybe they already have some investments, but it's been pretty hands off, any recommendations of what they can do, give folks homework basically out of it.
Sure.
And also any resources, if you have any favorite books or apps or even mutual funds you want to give shout outs. And then we'll close with your class happening next Tuesday. But yeah, so what's some homework that we can give everybody?
Perfect. So it depends on where you are. So if you are somebody that doesn't have the non-negotiables, doesn't have a 3 to 6 month emergency fund in a high yield savings account, that is a great place to start, especially because the rates are so good. So open a high yield savings account and tag me. Let me know that you did that and I will cheer you on because that is an awesome first step. And that is the first step for a lot of people that end up continuing to invest. So I love that first step. If you are somebody that already has that and you want to start to learn about investing or you have some investments already, I would start by looking at what you currently have and just Google the investments you have and learn a little bit about what you're holding. There's a ticker symbol in every single investment. It's just a group of letters. And if you put that group of letters into Google, it'll tell you exactly what you're invested in. So that's one next step you could take. The next thing I would recommend is understanding fees of your investment. So everything you're invested in has an expense ratio. This includes your 401k, your Roth IRA, every single fund, regardless of whether it's through a financial advisor, through your organization or your employer, has a fee called an expense ratio. And expense ratio is just an annoyingly confusing term for operating fee. And what that means is that based on whatever you're investing in that fund, that portion of it is going to get taken out as an annual expense. So if those fees are really high, like over 0.2%, that's something that you might want to think about changing. The last thing I'll say as far as getting started, those are just some quick tips of the things that you could look into if you want like a quick hit of something to do. But as far as the base, getting an education is like always the next step. And there's a ton of ways to do that. So some of my favorite resources, if you're a podcast person, Money with Katie is a great podcast. Also, So Money with Farnoosh Torabi is also awesome. Those are probably like my two favorites. And then if you are a book person, A Simple Path to Wealth by J.L. Collins is like the gold standard of how to invest in index funds. It's super easy to read. And I think it's only like 150 pages. It's a great book. That's probably the first one I would recommend. For Money Mindset, How to Be All, We Should All Be Millionaires, Rachel Rogers. Is that the name? Do you know this book, Claire?
Yes, I have this book. Yeah, she's taught with us. We have a class. If you go to ladiesgetpaid.com, go to the courses tab. Rachel Rogers is one of our original teachers. Yes, We Should All Be Millionaires. Excellent book.
She's straight fire. Like I read that book and I wanted to like run through walls, like very.
Yeah.
And then the last thing I'll say is there's tons of great creators on Instagram that share a ton of free financial information. So if you really want like a simple next step, you can follow me on Instagram at Wealth with Tess. I share a ton of free information there and on TikTok. And then I always have something in my profile, whether it's a free resource on investing terms, a free financial independence checklist. And right now on my Instagram and LinkedIn profile, I have a free investing workshop next Tuesday that you can sign up for. And it's completely free to attend. And I'm also giving out a money mindset workshop during that one too. So I would love to have you.
Fabulous. And actually in closing, I'm going to ask you a question that I think I'm going to be asking everybody, which is the fundamentals of becoming your own biggest champion in work, money, and life, right? And just coming back to like the Ladies Get Paid mission, we really want to arm women with all the tools, resources, and support so that they can earn more and live better. But that can look differently for different folks. Becoming your own biggest champion is the through line, though. You have to be your best advocate. We cannot wait or hope somebody else will do that for you. So I guess for you, in thinking about your own life and the work that you do and the people that you coach, what would you say are those fundamentals of becoming your biggest champion in work, money, and life?
It's a good question. I would say the first thing is acknowledging that while whatever situation you're in might not be your fault, it's your responsibility to change it. And I think that's the most important parting gift mantra quote that I can share. And when I think about that, the reason I say that is that there are so many things out of our control, and I've worked with women in shitty situations, like situations where it's completely not their fault. They're in a bad situation financially and it is not their fault. Like maybe something happened with their husband, whatever it is, there's endless amounts of reasons. But it's up to them to make a change and to do something about it. So you can be, depending, and also we don't all start from the same place, right? Like depending on your socioeconomic background or where you come from, like we don't start on equal playing field. Like it's not fair. A lot of people don't start in the same starting line. But at the end of the day, like it is your responsibility to figure out how to move forward. And it doesn't have to be a mind-bending 5-year perfect plan. Like just taking imperfect action is most important. So I tell people all the time, I have friends that have been like, oh, I want to join your course, but like insert like whatever excuse. I'm like, well, why don't you just start following creators or get this book or subscribe to this podcast? A little bit of action on a regular basis, consistent action can have huge results over time. So I think when a lot of people think about finances, they look at all their money and then they think, oh, I have to like fix this all right now. It's not going to happen right now. But if you start to educate yourself, in a couple years, you can be in a dramatically different position than you are today. But it's not a get rich quick scheme and it's not overnight success. And you shouldn't expect that.
Mm-hmm. And it's not all or nothing. You don't have to have a lot of money to invest. Like, we got to get out of this binary view that we have of just ourselves and our lives in general. And I think money is a really great way to practice that. Tess, you're fantastic. Any last things you want to share? Just remind everybody again where they can find you and follow you and pay you. Because ladies gotta get paid.
Yes. So follow me at Wealth with Tess. Definitely join my free workshop. I am also launching my Money Confident course, which is my online beginner investing program, is going on sale next week as well. And I am increasing prices because ladies got to get paid. So this is the last time it'll be at this discounted price. So I would love to have you. We also have an awesome group of women in the Money Confident community. And I'll say this too. One of the best ways to move forward, especially if you're overwhelmed, is to find an amazing community like Ladies Get Paid, like my community. Like there's so many amazing women creating groups of supportive, awesome communities, like that is probably one of the best ways to get started quickly. So I know the Ladies Get Paid community is an awesome one inside of the Money Confident program, which is my online course. We have they are all like giving each other referrals. They're sharing high yield savings accounts. Like sometimes I'm not even doing anything. They're just all educating each other. It's awesome. So find a group of people. But yes, come follow me on Wealth with Tess. DM me if you have questions. And thank you, Claire. Claire is like my original hero in business, so I appreciate you. Thank you for having me.
We're all the same. We're all just imperfect action is what I'm taking away from what you said. So that's like, all right, I've done enough. I've done some imperfect action. That's good. But this was perfect. So thank you for being here. Thanks for being my first guest. Glad that we recorded this, so it'll be up for folks after to watch and to listen to. I think we'll also probably cut it into a podcast. Really appreciate you. Oh, Elizabeth jumped in. Great discussion. Taking control of my own situation really resonated with me today. Yes, I think, again, there's lessons to be taken from everything that you said that can be extrapolated into different areas of our life. Again, just even I love the story of the woman discovering that she had so much more in her 401k. It felt similar to me and thinking, I don't have enough money to invest. And I'm looking into my bank account going, actually, no, I think I may. I think I have a mismatch of how I'm looking at my life and what's actually happening in my life, and what does taking control look like. Small steps, consistent action. Tess, thank you. And thanks to everybody listening or watching. Appreciate you, and go get paid. Bye.
Thanks. Bye.